Certainly global central bankers are huge buyers, but we're also seeing a lot of front running by the 1%, those that are in the know. And we know that by looking at, in the numismatic world, the ultra rarities, which run in the many millions of dollars for an ounce of gold. And that had a breakout few months ago, several months ago, and has been climbing higher and higher. So, I think people that can afford $15 million for a coin, they could write the rules, or they could certainly influence those that write the rules. And I think they know what's happening to our monetary system. Silver is the secondary monetary metal. Gold is the primary currency metal. So yes, both of those. The difference between the two is that silver gets used up. You can recover all of the gold. And since for me, this is a currency life cycle issue, then the primary currency metal is gold, and that's what they actually reset against. So where you mentioned $3,000 this year, we have a lot of things coming up this year. But ultimately, when all confidence in the currency is lost and we are in a hyperinflationary state, the true price of gold in terms of the fiat money, so the government-based money, is really somewhere north of $15,000 an ounce. Back around 1913, a 20th of an ounce of gold, which is what backed the dollar bill, would buy you 11 loaves of bread. I did an event in October and we recalculated it, and that same $1 gold coin would buy you 133 loaves of bread, right? So there are repeatable patterns, but why did I say 15,000? I am a very strong believer that in order to make educated choices, people need to understand the fundamental or the true value of, frankly, any asset or any instrument. And there could be a little bit of nuance in there, but since gold is the primary currency metal, okay, you take all the gold that exists in the world and even the gold that we know of that is yet in the ground. The current monetary system is based upon debt. That's how money's created. So you just take all the debt that's been created, not just in the US, because it would be much higher if we just looked at the US currency, but if we look at it globally, and you can even make your life easy and go to the global debt clock, and if you divide the debt, since that's the money, and by the amount of gold, it gets you somewhere north of 15,000 right now. And we know what they do is they do that overnight revaluation. And they take the currency that has no intrinsic value and they revalue it against gold, which is all intrinsic value, because both gold and silver are used in every single sector of the global economy. So they have the broadest base of functionality and therefore the broadest base of buyer. Well, China's really an interesting country, and they've really been front running the surveillance economy, right? And they have huge control over their population through, many means. But regarding specifically gold, nobody really knows how much gold China's been accumulating. And remember, it was 2006, I believe, where they actually allowed their citizens to buy gold again through their banks. So they're buying the gold, they're holding them at the banks, which is actually pretty darn easy for the government to confiscate, right? But the reality is since gold is good money and runs no counterparty risk, that whoever holds gold retains freedom, retains choices, and retains power. And we've been watching a shift of power from the West, from the US, to the East, to China. So, China's accumulating massive amounts of gold and have been encouraging their citizens to do it. So it is highly likely that they will end up with the most gold. I think we're probably going to price it in SDRs in the future, actually. And that's the IMF, the International Monetary Fund's currency that they created in 1969. And that's a basket of currencies. And you see, the reason why everything is US dollar centric is because we have the official title of world reserve currency, which basically means that if you're a government or a corporation, and certainly an individual, going outside of your borders, you had no other alternative but to use dollars to buy oil, lumber, medicine, everything. But it was already the end of 2000 when the Federal Reserve started to buy back U.S. Treasuries. So these things, even though they kind of seem like they happen overnight because you're not really paying attention, it really happens over a long period. It happens slowly until it happens fast, right? Yeah. And we're at the point now where it very well could happen fast because Saudi Arabia is talking about, and we've already seen this as well, accepting other currencies for oil. And after all, who's the plus in the OPEC plus? Russia. Yeah. And the reason why I think it will be the SDR is because it's been around for so long. Everybody has a bunch of it. They've been issuing massive amounts to different countries recently. And it's a basket of currency that could include every currency in the world. So they don't have to reinvent the wheel. They just have to tweak the one that's frankly already in place. And I think we'll end up with local currencies in the country, but the global currency is most likely, in my opinion, we'll see, to be the SDR because it's already established and it's easy. Well, I have to tell you, I was getting ready to retire before 2008, and I was in a little 2-bedroom condo that I could just lock up and travel and do whatever. And then 2008 happened, and because I've been in these markets on some level, since I was 10 years old, 1964, I knew at that moment that the system actually died, and it was just put on life support until they could finish out the new system. I personally do not think it's an accident, and especially if you read the 1996 NSA white paper on how to create a mint, and it's all about cryptocurrencies, right? So I personally do not think it's an accident that Bitcoin came out in January of 2009 and quantitative easing came out in March of 2009.